Financial reporting season is approaching. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your morning shine, top it up, and let's have a look at this article from ABC News regarding, well, the profit reporting season. Now, I've made mention to this in the past. Before I started getting interested in the economy and business, I didn't realize that there was a season when it all came out, and some people trade on this and use this to make strategic and investment decisions. And I was thinking, why is the market just going so hot right now until we actually see how some of these companies are going, how some of them are going. Let's bring up, we'll bring up one of my favorite websites. I've got a few favorite websites. We'll bring up Trading Economics, guys, and we'll see just how the market is doing, because there are a few interesting stories. So we've got the indexes. ASX 200 is below 6,000, 59.28. The US, Nasdaq, Dow Jones, S&P 500 are all up. It's going to be interesting to see. That's how the commodities going. Gold is sitting well. I think the market opening today will be quite interesting to see how it's going. So it's been trading sideways for a while around the, trying to break over 6,000. It's heading down. Keep an eye on it. Now, the one example I like to draw everyone's attention to is just the Hertz, guys, because this was a company that was going bankrupt. The people in the know, the wealthy investors, they were selling to us proletarians, and people were just throwing their money in it. All the retailers were throwing their money in it, and it was a company that was going bankrupt. Because the problem is, they thought it was cheap. They thought it was a good investment. They thought it would bounce back. They were buying into the hype. Guys. So let's have a look at this article from the ABC discussing the financial reporting season and what to expect in coming weeks. Let me know if are you watching this, guys? Are you following the market? Do you think we'll get good returns? I mean, Apple did really well. They're doing a stock split. So anyone who was sitting in that, I'm sure they're going to be doing quite well, while other companies aren't doing so well. So, Australia has just entered corporate confession season, with the vast majority of share-listed companies due to update investors on their results for the financial year just ended on June 30. It's one of two times a year, the other in February, that investors are guaranteed to see some light shed on how their companies are performing. These accounts are externally audited, and it's a serious offense to mislead, so shareholders should have reasonable confidence they're getting a true picture of the past 6 months' performance. And what a 6 months it's been. There's never been a confession season quite like this, one that coincides with a pandemic, recession, and record stimulus to keep entire industries from collapsing. I think this will be something I'll have to just get on top of it so we can look at just discussing these reports. I think it'll be interesting to follow. Since the panicked market sell-off in March, a large number of ASX-listed companies have slashed dividends, raised extra cash to stay afloat, and provided scant detail about their outlooks. Many have also refrained from disclosing whether their business is being kept alive by JobKeeper wage subsidy, which are due to be scaled back in October before ending in March next year. Morgan Stanley's analysts say that lack of disclosure is a good reason to watch this reporting season closely. Despite investor feedback that earnings don't matter amid the crisis, we think financial year 2020 earnings are important, they wrote. Yeah, it seems to be like that. It seems to be like earnings don't matter, profitability don't matter, the fundamentals don't matter. I think that's fun. Well, I think the fundamentals will matter, will come back with a vengeance, and we'll see that manifest in the ASX 200. Yeah. What do you think? You think I'm right there? Let me know in the comments, guys. What's your predictions? In a world where guidance has been withdrawn, earnings estimates are stale, and earnings dispersion is very wide, the looming refresh will provide much-needed context and depth to what has typically been updates that have been narrow in focus and scant on detail. Much of the detail is likely to be brutally negative. So profits are tipped to plunge. Investment bank Citi says the consensus among its peers is for Australian corporate earnings to be down more than 15% over the past financial year, more than half of which was unaffected by the pandemic, with no earnings recovery in the current year. This would match up neatly with the share prices, which are around 15% off their pre-pandemic peaks on the ASX. So has this been priced in? Has it been priced in? But will negative news still cause a drop? Will it still cause a drop, guys? Probably. That despite the quickest rebound in history from a 36.5% slump at the trough as investors welcomed unprecedented government and central bank stimulus and bet on a successful vaccine being found in record time. But Citi's analysts are more pessimistic. They're expecting earnings to have dropped 20% last financial year. With earnings down and the outlook uncertain, dividends are likely to be drastically cut on average. Citi analysts are predicting dividends could fall by 37% from $72 billion last year to $45 billion this year, with the biggest declines from banking stocks. The regulators have already warned banks not to pay out more than half their earnings to shareholders. Citi is also warning that earnings could remain depressed for some time, forcing many companies back to investors to ask for more cash through discounted share sales. Renewed outbreaks in Victoria and New South Wales mean rolling lockdowns are likely to remain a reality for some time, meaning a healthy balance sheet is key, the bank's analysts wrote. Net equity raising totaled $28 billion in the June quarter, a similar level to that reached during the 2008 financial crisis. We expect more raisings in the coming months. So, there you go. Morgan Stanley analysts agree that the share price recovery looks too optimistic, and there's scope for great pain in this reporting season as companies reveal just how badly they've been battered by the pandemic recession. Multiples look stretched, Morgan Stanley's equity strategists warn. They believe the Australian market is trading at 19.4 times what earnings will likely be in the next 12 months. Earnings are always the best test for price, and we expect some digestive discomfort after a period of heightened economic stress and limited company information flow. But while there will be great losers and probably a few more high-profile casualties who don't make it on the other side of the pandemic, some companies have capitalized on the pandemic. So the winners. Here we go, gold shines. Mining stocks, for example, are expected to be responsible for a third of dividends in the upcoming reporting season, up 26% from last year, as Chinese iron ore demand recovered rapidly, underpinning the profits of the big three, BHP, Rio, and Fortescue. And the news has only been getting better for gold miners over the past few months as the precious metal hits record highs. Another group of COVID beneficiaries, at least in the short term, are some large retailers that sold goods in demand just before and during the lockdown. Supermarket giants, Woolworths and Coles benefited from hoarding and a shift from eating out to dining at home. Coles' one-time owner, Wesfarmers, saw strong sales at its Officeworks and Bunnings stores as customers set themselves up for more work and leisure time at home. Electronics and appliance giants JB Hi-Fi and Harvey Norman got similar boost, with Greg Harvey's outfit also benefiting from rising furniture sales. Other retailers saw a rapid recovery once the lockdowns ended due to pent-up demand. On Friday, Super Retail Group, which operates Supercheap Auto, Rebel Sport, and BCF Outdoor Chains, reported a 27.7% jump in June sales. But Citi is urging caution because people climb onto the retail bandwagon. Trading updates for the reporting season are expected to be positive, given government support and the superannuation withdrawal, its analysts noted. This may prove misleading, as there will be a step down in stimulus come the December quarter, which is likely to result in weaker retail sales growth. This reporting season may be a case of the tortoise and the hare, with some companies racing ahead now only to jump into a great haul next financial year, while others that have struggled but survived continue to move forward. For other firms like those in travel, survival is the only game in town until an effective vaccine or treatment is found, the pandemic conquered, and borders reopened. The key figures to watch for there is debt and continuing costs. How long can these companies exist on shareholder, bank, and government life support before it's plugged? So the calendar. These are the major ASX listed companies and the reporting calendar. So Rio Tinto was on Wednesday. We missed that. There we go. And August from the 6th to the 7th. So we've got ResMed. We've got Insurance Group Australia on Friday, News Corp and REA, GPS, Nick Scali, and we've got a few here. So we'll have to go through these. Maybe I'll do one video looking at all of them each day. Doing a combined video. We'll have to see, guys. So there we have it. Reporting season is out. How do you think the market will respond? How are you positioning yourselves to take advantage of it? Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Kucoin. You can buy our merch from HeiseSays, use a gold pass from the Perth Mint, or support us via PayPal. Take care, everyone. I'll see you all in the next episode.